Okay, this is the video for 21-3, exercise 21-3. Noble Company's accounting records provide the following changes in account balances and other information for 2019. All right, so they gave it to us kind of in a little bit of a worksheet form, but we have the balance sheet accounts. Now, remember I briefly talked in the lecture video about how, the debits or credits represent increases or decreases, depending on what the account is. So cash as an asset has a debit balance. So if the worksheet shows a credit change, that means that cash decreased by $2,000. And we're trying to explain where this $2,000 change came from. All right, accounts receivable, the change was a debit of $1,900, so that means accounts receivable increased. Inventory decreased, land decreased, buildings and equipment increased, accumulated depreciation actually increased because it has a credit balance. Accounts payable increased. All right, now we're in liabilities, so they have credit balances. So credit means that they increased. Salaries payable decreased. Bonds payable increased. Common stock increased, and retained earnings increased. All right, additional information. Net income was $9,900. Dividends were declared and paid. Land was sold for $1,700. No land was purchased. A building was purchased for $23,000. There's your change to buildings. No buildings and equipment were sold. Bonds payable were issued at the end of the year. 200 shares of stock were issued for $15 per share, and the beginning cash balance was $4,800. All right, and we're just supposed to use visual inspection, which means we don't have to do a big worksheet and, all that kind of stuff. And then this is problem 4 down, or exercise 4 down below. All right, so they tell you to start off with the title. So Noble Companies. No, just Noble Company. Crazy, sorry. Statement of cash flows. You already know that, though. It's for the year ended 12/31/2019. I'm going to assume they don't tell us any different. All right, so we have operating activities. And let's go through and do that. All right, so we're using the indirect method. So I'm going to start with net income. All right, they told us right here net income was $9,900. And then I need to do adjustments for non-cash items. All right, the only thing they're going to have is depreciation expense. I don't have an income statement that directly shows it, but I do have accumulated depreciation, and I know it increased by $4,500. Then they also told us that no buildings and equipment were sold, so accumulated depreciation wasn't hit for anything but depreciation expense. All right, so our depreciation was $4,500. I'm going to add that back. All right, that's the only non-cash thing we have. All right, then I'm going to have adjustments and working capital. WC is working capital. Working capital items. All right, so this is all the current assets and current liabilities. All right, so my accounts receivable increased. So I have an increase in account receivable. All right, if accounts receivable increased, that means I did not get money. So I'm going to subtract it out. And you know what? I'm going to come over here and I'm going to do this. All right, inventory decreased. All right, so since inventory decreased, that means I sold some inventory that I bought last year, and I didn't pay for it this year. I paid for it the year before, so I need to add that back. All right, that's it for working capital items there. So now I come down to accounts payable. Accounts payable increased. All right, that means that I did not pay for something, so I'm going to add that back. All right, and then I have salaries payable. Salaries payable decreased, so I paid for something. So I'm actually going to subtract that out. And that was 600. And that is it for the operating section. So I just sum this up. All right, that is net cash provided by operations. All right, then I have investing. Sorry, my brain sometimes gets ahead of my fingers. Investing activities. All right, I think I had a couple of things here. I sold this land. They don't say anything about a gain or a loss anywhere, so I'm assuming that I sold it for what I paid for it. So I'm going to have proceeds from sale of land. A building for $23,000. So I'm going to subtract out the 20. Dude, I don't know what happened there. So I'm going to, my keypad quit working. That's what happened. So I'm going to subtract out the 23,000. And that's it for that. So this is net cash used by investing. I'm going to have financing. Okay, for financing, my bonds payable went up, so I borrowed some money. Bonds payable were issued at the end of the year. So I have proceeds from bonds. I sold some stock for and I got $3,000. All right, and then I know I paid some dividends. It said dividends were declared and paid, but it didn't really tell us how much they were. All right, but if you remember, retained earnings is plus net income minus dividends. Okay, and then the change, my goodness, is your net income minus the dividends. Okay, so I know that my change was $5,300. Why does this keep happening to me? I know that my change was $5,300, and that's going to equal my net income of $9,900 minus my dividends. So dividends equal 9,900 minus 5,300. Dividends equal $4,600. All right, and then I add those up. And that's my cash provided by financing. All right, then I total these three. All right, that's my net decrease in cash. And notice it ties to this change over here. All right, so I know that I did the basics correctly. Okay, at least the adding and subtracting. Doesn't necessarily mean I have everything in the right spot, but I know I have the right numbers. And then it told us the beginning cash balance was $4,800. So cash at beginning of year was $4,800. And then add those two together. And this is cash at end of year. And then I'm going to make it look pretty, but you had the basics there.